Good evening, traders. I am Devang Mehra from the Financial Analyst, and I welcome you all to the Bold Project. In this module, we will be discussing about stock selection. How should we, as a trader, select stocks for intraday trading? That's the main question. The reason is you have two constraints. You have a time constraint and you have a capital or money constraint. When you come into the markets, two things are holding you back. First of all, let's assume I have a capital of 10,000. I only can put 10,000 in the market. If I choose the wrong stocks, my capital is stuck, and if I want to trade some other stock, I will have to book a loss then and select other stocks. I have a money constraint. So you have to be very judicious in choosing the stocks, otherwise your capital can get blocked during the entire day. The second constraint is your time. You have only 6 hours. So we trade in India from 9:15 to 3:30. In the last half an hour, not a lot of movement happened. It does happen, but shares tend to get muted in the last 15 minutes due to the closing session. So you have those 6 hours. If you choose the wrong stocks and if the stocks don't move in that day, you are probably losing the time value of money. You are entering in the market for no reason. So you have to be very disciplined when it comes to selecting the stocks. Also, I would like to tell you something what I faced when I started my journey in the markets. So when I entered the markets, the word around that time was select the stocks as per the NSE data or the data on money control. What I'm trying to say is go look on the NSE website, go look at the money control website and see which stocks are top gainers, which stocks are top losers, and accordingly try to trade off them. I'll give you an example what I'm trying to tell you. I'll open moneycontrol.com for you. Those of you who are not from India, it's one of the leading financial information websites or sourced information website in India. So when I say top gainers and top losers, basically it means if you go on the Money Control website and if you can see which are the top gainer companies of the day, which are the top losers of the day. So what I'm trying to say is the word when I was when I started the markets was look at this data and accordingly select stocks and trade. The problem with them was that I would have to wait till 9:15 a.m. every day till this data was out, till the stock started trading in the market. I cannot decide one day back or 2 days back what stock should I trade. And that was the thing holding me back. It didn't make much sense to me. A lot of people still use this approach. They go to the website and see what are the gainers. But for me, that is a very, I would say, a very risky approach in coming into the markets. The reason is I want all of you to do some homework. When I come into the markets, my homework is done in the sense one night before I already prepare my watch list. So that's exactly what I want to talk about today. I highly suggest if you are serious about making some retail income, about some income in the market consistently every day, do not wake up at 9, open your applications, see which stocks are gainers and accordingly trade in them. That's a very fatal way. It's going to blow up your account. You need to be ready with the levels. You need to be ready with the stocks one day prior. So what I do is as a personally as a trader, and as a mentor, I would like to guide you. I want you all after your dinner. So if I want to trade tomorrow, it is Monday. On Sunday after my dinner, I will open my trading charts, trading platforms. I will already make a watch list. I will make my levels, and I will be done for my setup for tomorrow. So if those levels are triggered, I am trading. If those levels are not triggered, I am not trading. So I am very disciplined in that approach. Please understand, you do not have to chase the market. You have to let the markets come to you. Do not trade every day just for the sake of trading. If your levels are being triggered, we will only trade then. If they are not triggered, we do not trade. We miss the day, we wait for the next day, because in the market we have thousands of opportunities. Let's talk about how can we select our stocks for intraday trading. Two methods I will be giving you. In this part, I will be talking about a fundamental method to help you picking the stocks. In the second part, in the next video, I will be talking about a more technical point of view method. You try out both the methods, see which you are comfortable with, and accordingly you can start to trade and make money in the markets. So the first method I would like to talk about is called the fundamental catalyst approach. This is a method I have incorporated from my American colleagues. It's used in America extensively. So it is called a fundamental catalyst method of selecting stocks. What is the fundamental catalyst? Let's try to read through this PDF and understand. It's a one-page PDF. You can take a screenshot and note it down for your reference for the future. So retail traders, we are retail traders. We should only trade in stocks in play. What are stocks in play? Stocks in play are those stocks which are trading with high relative volume and have some kind of fundamental catalyst. I will repeat again. We are retail traders. We have to follow the big money. We cannot move a stock. Please understand, you and I cannot move a stock. For a stock to move, some big institutional order has to come into place. That order, which is a bulk deal or a block deal, can only move your stock. If your stock is moving sideways, you cannot make money. So what you need is every single day, the stock that you trade should have volume, should have volatility. If your stock does not have volume, does not have volatility, it is going to move sideways. You will waste your entire 6-hour trading session. So again, we as retail traders have to invest in stocks in play, and these stocks in play are those stocks which are trading with high relative volume and have some fundamental catalyst behind it. Let's discuss these terms slowly and steadily so you get an idea. So what is a fundamental catalyst? That's the main question about what everyone's asking me now. Fundamental catalyst is some kind of fundamental news released about a company. So tomorrow, let's say tomorrow is Monday. Today is Sunday. As I record the video, it's Sunday. I want to plan my trading for tomorrow. What is a fundamental catalyst? Fundamental catalyst means some kind of fundamental news released either today or tomorrow during the market, because I have time till 3:30 to make money. So any news coming out today of a company or by tomorrow before 3:30 market closes, that is called a fundamental catalyst. Very, very simple. So if you have some kind of news in your company, it is very simple. All the big institutions will start to focus on your stock. They will watch your stock like they are a hawk, they are an eagle. Very simple. There are about 5,000 companies listed in India. For the institutions to eye a particular company, they need some kind of a comparative advantage, something to trigger their order. I hope you're understanding this point. So for a company, for let's say I'm Morgan Stanley, for me to give my attention to Tata Motors, I need some news triggered in Tata Motors for me to analyze whether it is good or not. As simple as that. So if you have a fundamental catalyst, which is any news today or tomorrow in the market, that is going to bring up some volume in your stock, that is going to bring up some volatility in your stock. So you can basically pick up that stock in intraday and trade on it. That is the reason. Now let me combine what I was told when I started. So people told me trade in top gainers and top losers. Don't you think a fundamental catalyst is going to push a stock to be a top gainer or top loser? If some news is good, stock will be top gainer. If a news is not good, it will be top losers. So I hope I have linked every single thing till now that I'm trying to explain to you. One question I get asked a lot: are you telling me to trade on news? I want to make this point clear. I am not telling you to trade on news. I made that very clear in the initial videos. I made a video with that concept. I am not telling you to trade on news. I am not telling you that if a positive news comes in the market, buy the stock. I am not telling you that if a negative news comes in the market, sell a stock. I am only telling you filter the stocks due to the news. You have 5,000 stocks. If let's say if some news comes into the market with 100 stocks, filter those 100 stocks, find the levels of those 100 stocks, whether to buy or sell, that is up to you. We are just filtering the stocks so we have volume in that stocks and we can trade buy or sell. I am not trading on news. I will trade technically. I might sell a stock with good news and buy a stock with bad news. That is what my technicals will tell me. You have been trained in technicals now. I am only and merely selecting my stocks based on the fundamental catalyst approach. Hope that is clear. Now let's talk about what are the 7 to 8 fundamental catalysts. Please, a lot of people ask me, where do we get this news? I have our team, the financial analyst, we have a WhatsApp community. It's called TFA Daily. So if you're not already in that community, just message us. We will add you to that community. So in that community, we are sharing real-time market updates, broker research, reports, everything, global market news, journals, publications, so you can be up to date with the market. So for me, that's the way I like to look at news. But otherwise, if you don't want to enroll there, you can look at Money Control or your broker's website. All right. So what are the some examples of fundamental catalysts? I will discuss these events and then I will try to show these events on the most recent examples on the charts. So the first example of fundamental catalyst would be something like an earnings report. So for example, in India, it's the same all over the world. The months might be different, but the concept is the same. The first fundamental catalyst is your earnings report. So in India, as per SEBI regulations, all the listed companies have to post quarterly earnings. So there are 4 quarters in the market. Quarter 1 is your April, May, June. Quarter 2 is July, August, September. Quarter 3 is October, November, December. And quarter 4 is Jan, Feb, March. So in India, the SEBI, which is the market regulator, they have mandated companies to post quarterly earnings. So every quarter earnings are coming of the companies. So whenever a company is posting earnings, that event becomes a fundamental catalyst. For example, today Eicher Motors is reporting their earnings for quarter 2. So that will become a fundamental catalyst. And tomorrow I will look at Eicher Motors and try to trade, whether on long or sell side, that's totally up to me. But that event becomes a fundamental catalyst. The second fundamental catalyst is earning warnings or pre-announcements. Very, very simple. For example, I can remember the example of Reliance in this. A couple of sessions back, Reliance posted its quarter 2 earnings. Before the quarter 2 earnings were posted, there were a lot of brokers which were expecting some kind of a poor earnings season by Reliance. They were expecting about a 30% fall in the net profit of Reliance. So any earning warnings or any earning estimates that are coming in, that will make your stock a fundamental catalyst. Very simple. If a big broker is estimating that the earning of Reliance will fall, everyone starts to sell Reliance because everyone starts to focus on Reliance. So any kind of warnings, any kind of announcements will make your stock more active and more volatile in the trading session. Third fundamental catalyst would be your FDA approvals and disapprovals. What is FDA? FDA basically means your United States Food and Drug Authority. So this is actually applicable to your pharmaceutical companies in India. So since this pharma drug space is a very highly regulated space, the US FDA, which is a top eagle watching all these pharma companies, they keep on issuing something we call Form 483s, establishment inspection reports. So any of these events coming into the market will affect the pharma companies. So we would like to, if any such news comes in the market, we would like to pay attention to such companies because they will become fundamental catalyst. Also, there are something called FDA approval. So if a new vaccine, if a new medicine or a new tablet has to come into the market, it needs the stamp, the approval of FDA. So if any FDA approval comes, that company will become fundamental catalyst. The fourth example would be a merger acquisition. For example, the most recent example that happened today as I speak, Reliance has acquired 96% stake in Urban Ladder, which is a furniture company. So this is a merger acquisition. This means that tomorrow when I start trading, Reliance will be in the news. So I can pick Reliance because it will be moving with higher relative volume. Then the exam, and basically Facebook, Google coming into Reliance, Reliance Retail, all these acquisitions and all will be a fundamental catalyst. Another example would be partnerships, any major product release. So any let's say consumer company coming out with a new product, any new partnership. So if I am a company, I am partnering with another company, such events, they become fundamental catalysts. Try to pick these stocks up because they will be trading very volatility and you can easily make money. If these events are not there, they are not moving, they will move in a straight line. You can't make money in these companies. And finally, the last 2-3 are major contract wins. So for your construction companies such as Larsen and Toubro, Siemens, these companies have good contracts. They're allotted contracts. So when these companies win contracts, that will be regarded as a fundamental catalyst. You will hear a lot of times in the market, Larsen and Toubro awarded a contract for 25 billion rupees. Such events will make that company a fundamental catalyst. And finally, any management changes. So for example, a particular company CEO changes, CFO changes, any directors resign, any such event will make you a fundamental catalyst. And finally, any dividend issue, any buyback, any rights issue, any stock split. So this is a very, very easy example. For example, stock split. The most recent example is your Eicher Motors. The shares were trading about 24,000 rupees per share. You all must be remembering that. And currently it's been split. So it's trading at 2,500 rupees per share, 1:10. So that tells you that some corporate action has happened. That company will be in focus. Another event is buyback. When the management of the company, they want to buy back the shares issued to the public, or any rights issue. Rights issue basically means that when the company wants to basically issue more capital and preference is given to the existing shareholders. All these things you can in detail look up what these events are. You can go to Google, go to Investopedia, any financial website, and you can find more detail. But this is a gist of what my fundamental catalysts are. So whenever you are a fundamental catalyst, just to recap, you will be moving with high volatility, high volume, so you can make money. Again, I am not trading on news. I'm only using them to filter out some stocks which will be moving with good volume for my day. Now, let's look in the charts and try to understand what have I exactly told. So exactly I was telling you, final concept is whenever you are a fundamental catalyst, you will be trading with high relative volume. Please understand, a lot of people ask me this doubt. What do you mean by high relative volume? Do I mean that shares of Reliance will be trading with much more volume than shares of Tata Motor? Please, that's not right. It is very, very obvious. Reliance in India is the is the largest company with according to market cap. The second largest company in India is TCS. So it is very obvious that on any random day, your Reliance shares are going to trade much more than any company shares. It is highly obvious. Same is example for HDFC Bank. It is, I think, the third largest company in India. The shares of HDFC Bank are going to trade with much higher volume on any single day than Maruti. That is very, very obvious. When I say higher relative volume, it means shares of Reliance today should be trading higher than the shares of Reliance tomorrow or in the previous days. So when I say relative, I am comparing the same company but with my previous days. So for example, as I gave the same example, Reliance today has acquired Urban Ladder. So I want tomorrow the shares of Reliance should be trading with higher volume as compared to the past 6-7 days. I hope you understand the concept. Let's look into some examples. I have got some screenshots of our TFA daily WhatsApp community. So we will try to see those examples and accordingly try to understand the concept. This is the example of Biocon. So if you remember, I told you for the pharmaceutical companies, FDA approvals are very important. So on Friday, we got a news that Biocon gets US FDA approval for an eczema drug, tacrolimus. That's basically a new approval, new product coming into the market. So when such event comes, I want to show you the daily charts, and the volumes have been plotted below. So if I open the charts of Biocon on Friday, you can see the expansive, massive volume in Biocon because of that fundamental catalyst. So you can see on Friday, this is the charts of Friday, 13th of November. You can see how high the volume was as compared to the last 3-4 days. We are much higher, much relatively higher. So you can basically open the charts up on the intraday basis, find some trading system, use the strategies that we have taught you to trade in Biocon. Not because it's a good news, but because we are looking to buy the land. So for example, you can see a resistance being placed here. This is a very strong resistance. So when it is broken, you can also see an inside candle formation, a very big green candle, then an inside candle, then another breakout. So there are multiple setups telling you to buy Biocon. So I am not using the news. I am just filtering this Biocon stock because of news. Using my technical methods, a resistance is there. We have an inside candle formation there, and I'm buying. Again, you can see this is a resistance, another inside candles, and then you can start to buy here because a huge high volume breakout is happening in the market. I will give you another example. Okay. This is the news of Piramal Enterprises. The Blackstone Corp has agreed to acquire glass unit of Indian conglomerate Piramal for about 1 billion. So any such acquisition, partnership news comes, I've told you, it becomes a fundamental catalyst. Open the charts of Piramal and you will see very clearly about the changes in the volume. I will again open the daily chart and you can see how high the volume of Piramal would be. Right. So I hope you're understanding this concept while the screen loads. So this is the charts of Piramal on the daily time frame, and you can see on 13th the increase in volume just because of that news flow that is coming in into the market. And this volume is much higher relatively as compared to the last 5 to 6 sessions. Go on a 15-minute chart, find a trading entry. As simple as that. So if I go on a 15-minute chart, I will try to show you how could I have entered. Very simple. This is my resistance. I have a trend line support coming in. I can easily start to buy Piramal Industries on this breakout because huge volume is basically confirming my move. So I picked Piramal. I waited for my entry. So luckily I got a long entry. I would like to go long on Piramal. So I hope you're understanding how I'm combining these concepts and trying to trade on such events. I will show you one last example. Yeah, this is the Eicher Motors. So the Eicher Motor, as I was giving you the example, the profit. So this is the quarterly earnings acting as your fundamental catalyst. So you can see the profit data is coming out. Quarter two profit is 3.43 billion. It is much higher as compared to the estimates. So if I look at the chart of Eicher Motors, you can clearly see how Eicher Motors will be trading. The volume should be higher as compared to my previous days. So we'll just check into that. And I think with this example, you will be clear. You can see this. You can see that very, very clearly how high the volume is just because of that earnings news, just because of that event, fundamental catalyst. It really fueled up the rally. And you can look at the 15-minute charts on 13th of November and try to trade. So you can see in the first 15 minutes only, you had an opening range breakout, or you could trade something maybe over here after this was broken out. So basically, another entry would be something over here, an inside candle, mother bar, inside candle, and a big green bar. So you can trade that also. What I'm trying to tell you is we filter the stocks, we use our strategies that we have learned in this course and try to trade so that we don't lose money, we don't lose time, and we are safe. That's what I'm trying to tell you guys. If I don't open any stock which is not a fundamental catalyst, if I randomly trade, what happens then? Let's say I look at the chart of Coforge. I'll show you the daily chart. You will see the difference. It's a vast, vast difference. This is how you can separate yourselves from the average trader. These are some concepts which you can use in the market to actually make money. So you can see the charts of Coforge. There was no fundamental event or catalyst about this, and you can see the volumes at which it is trading. There is hardly any volume. The share is going to move sideways. You can't earn money. I'm not saying you can. You might earn 1 2 days, but that will not be sustainable. So if I have given you a more systematic, a more disciplined approach, try to use that in the market. Also, see the example of Infosys. Since there is no event, since there is no catalyst, it is not going to be trading at a good volume. The example is very clear. It is trading at what I call a lower relative volume. The volumes of last 2 3 days are much higher as compared to volumes today. So it makes no sense for me to trade Infosys. So if you are making a loss, it is not because you're not a good trader. It is because you are not selecting the right stocks. So just to wind this up, I would like to end it with this. You are only as good as a trader as the stocks that you select. So please invest into stocks by selecting them judiciously. I hope you understood that. Thank you very much for your time. If you have any doubts, let me know in your weekend webinars or in the WhatsApp group.